Hello, student. Welcome back to Cooperative Academy. We have already discussed certain part of our previous chapter, that is the forms of business organizations. Today, we are going to start further forms of business organization, that is your corporate society. So, what do you mean by corporate society? Let me help you to understand. The word corporate means working together with others for a common purpose. Means you are working with the other people or other student or other your relatives, your friend for a common purpose. So sometimes when you are working for a purpose, you are cooperate each other. That's why the name cooperative is originated from there. And right now, society we are talking about. So people who are corporately helping each other, who are cooperating each other, who are helping each other. So they are together for for a common purpose. So this is your cooperative society is a form for a common purpose. A cooperative society is a voluntary association of a person who join together with the motives of the welfare of the members and to protect their economic interest in a democratic way. It must be registered under the law governed by the State Cooperative Society Act and the Multi-State Cooperative Society Act if operating across the states. So basically, cooperative society is a voluntary organization or voluntary association in which all the members who will join together with a particular motive or with a particular purpose, they definitely help each other. They protect the interest of economic interest of each other. Sometime all the milk vendors are formed and they have a cooperative society. So in this particular milk vending cooperative society, all the members who have been participated in a cooperative society, they are protecting their economic interest. How they are protecting their economic interest? They are helping to sell their milk from one person to others or one society to others, or sometimes they are collecting the milk from all the milk vendor and further they are distributing the milk to the customer. So this is how they protect the economic interest in a very democratic way. Now, cooperative society is registered under the State Cooperative Society Act, or if it is operating in a multi-state, then you have to register your cooperative society under the Multi-State Cooperative Society Act. So this is your cooperative society and its detailed description that will help you to understand why you form a particular cooperative society and how the people who are being part of it protecting interest or protecting the economic interest in a very democratic manner. Now let's understand its feature. Features are very unique regarding the cooperative society. First, you have to understand the voluntary membership. Membership is a completely voluntary, right? Anybody can join, anybody can left at any moment of time. So anyone can join and leave at any time after serving his notice. No compulsions can be exercised, and a membership is open to all regardless of their religion, caste, and gender. So this is your voluntary membership. Second, it's a legal status. Registration is a compulsory. If you form a particular cooperative society, then you need to register your cooperative society under the State Cooperative Society Act, or if you are working in a multi-state, then you have to register yourself or your cooperative society under the multi-state cooperative society act. So you have to register, and registration is compulsory. So this grants the society a distinct legal identity separate from its member, allowing to the hold the property, enter the contract, and sue and be sued. It's just like a company, right? You have to register your company in the same way you have to register your cooperative society, right? And it has a legal entity or legal separate entity from its member. It can hold the property, it can enter into a contract, it can sue and be sued on the behalf of its name. Then member have a no obligation on their private property and their names. So if anyone has to file a case or sue the company or sue the society, then corporate society registered under a particular act can be sued and can be sued and be sued, or the societies can purchase the property, can enter into contract on its behalf, and it has a separate entity from its member, just like a company. So it has a stable continuity unaffected by the entire exit of the member. So if there are only 10 members or say 20 members, even though if there is only one member, sometimes it might not be possible for a cooperative society to run with the one member. So whatever the strength of the cooperative society in terms of its member, or it might be possible for the member who can leave the cooperative society or who can join the cooperative society. So anybody and at any point of time can leave and join the cooperative society, but corporate societies has its a legal existence in the eyes of the State Cooperative Society Act. So any person who will take a charge against the particular corporate society, so he or she can file a case against the companies, against the cooperative society, not the members. So this is your legal status, and it is not affected by the entry and exit of the members. Next is your limited liabilities. Liability of a member is limited to the extent of the amount contributed by them as a capital and capping their maximum risk. So if you want to know about the how much liability a person has, so liability of a person is only confined to the cooperated contributed capital by him or her. So any person or any person who wants to pay out the debt, then he can pay out the debt up to the contributed capital by him. So he will have the maximum risk limited to their capital only, what they have contributed. After that, there is no responsibility of them. So in this way, they have to handle the limited liabilities. Next is control. Decision making power lies in the hands of the elected managing committee chosen through the democratic vote. So control, that means decision making power is definitely exercised by the elected member or elected people through the committee with the democratic vote, and by casting a vote they can choose a managing committee or managing people of the committee, and they will take the whole and sole decision about cooperative society. So all the related all the decision related to the execution, implementation, or any idea, so all they are handled through their elected members. So they totally control the decision making process and the other execution aspects of the cooperative society in their hands. Next is service motive. The main working focus is mutual help and the welfare remaining, meaning the service motive dominates over profit. Any surplus generated is distributed among the member as a dividend according to its by laws. The main working focus when you form a particular cooperative society, their main focus is to mutually they help mutually each other, and they help and they work for the welfare of the society members, and their service motive is considered more important their overall profit motive. So their profit motive is secondary than to the service motive. So any profit or any surplus amount is generated or remain with the cooperative society, that is to be distributed among the member as a dividend according to its by laws. So sometimes service motive is having a cap on the overall profit. So service motive will be reflected more on their overall profit motive. So the member of the cooperative society, they will take interest, serve the member in a very economical way. They mutually help each other so that the each and every member of the society can benefit it by the by the particular society, by the cooperative society. So everywhere they are putting their lots of energy, lots of interest, and they take care full consideration of the member in its context, and they will definitely help each other in a very fruitful manner. So this is your feature that is associated with the cooperative society. So main five feature, that is the voluntary membership, legal status, limited liability, control, and service motive is considered more important than the overall profit. And this is how your feature will be reflected in the cooperative society and its a form. Next, if you study about the merit and the demerits of the cooperative society, so first merit is concerned with the equality in the voting status. It is governed by the principle of one man, one vote, one no vote. A member of the cooperative society can only cast one vote at a time. So every member get equal voting rights irrespective of their capital contribution, whether they have contributed more capital or less capital. They do not have to worry. They just have a one vote and one man right in their cooperative society. So every man can cast the vote irrespective of their capital contributed. Limited liabilities. Personal assets of the members are safe from the business debt since liability is restricted to their capital. Stable existence. Continuity is unaffected by the death, bankruptcy, and insanity of the member because of their separate legal status. As we have already discussed, that cooperative society has its separate legal existence than to their members. So the cooperative society will continue and is unaffected by the death, retirement, bankrupt, or insanity of the member because of its separate legal existence. Then economy in the operation, focus on eliminating the middleman to reduce the cost. Since customers or producers are themselves member, the risk of bad debts is lower, and member often offer honorary voluntary services in the cooperative societies. So all the operation related with the cooperative society is very economical, and they prefer to help each other. And most of the cases, member of the societies focus on mutual benefit of members, and they definitely work on the to reduce the overall cost of the operation, which might provide a more profit to the member of the society. So their operation are definitely for reducing the cost. Their operation are definitely for eliminating the requirement of a middleman, because middleman definitely charge a certain percent of commission if they provide service to other person or other required person. So they, uh, they are they are playing the role of a middleman between the, for example, milk vendor and the customer. So here, if the cooperative society is formed and all the milk vendor are being part of that cooperative society, though, so they can directly sell to the customer. So in this case, you have eliminating the requirement of a middleman in selling the milk. So since customers and producer are themselves member, the risk of bad debts is over, and the member often offer honorary voluntary services. The customer automatically approach them, and producers automatically serve the services to the customer on their behalf. So in this case, operation is in a very economical condition, and most of the cases they will be saving the cost in order to run the operation. So economy in operation is very much fruitful only when you are eliminating the requirement of a middleman. Now, support from the government. As a domestic institution, they receive strong government support in the form of low taxes, subsidies, and a low interest on the loans. Sometimes, most of the cooperative societies are supported by the government, and the government take a strong interest by providing lower tax rate on their working, lower tax rate on their profit. Sometimes they subsidize their overall operations and lower the interest rate if they charge, if they take loan from the commercial bank to run their operation. So this is how your government will support them by lowering the taxes, by subsidizing the operation, and by charging a very low interest rate on the loan subscribed by the commercial cooperative society. So government is also helpful in this case. Ease of the formations. Your societies can be formed easily as a voluntary association with a simple registration procedures involving the few legal formalities. So this is a very easy to form of the cooperative society and its process. Now we are working on next, that is your limitation. Cooperative societies have some limitation in terms of its resources, inefficiency in management, and sometimes they have a lack of survey, government control, and difference in opinion. So, because of these limitations, because of these demerits, cooperative societies are not being popular among the new businesses, right? So let me help you to understand how these five major limitations will not allow any other particular entrepreneur or any other person who wants to start or want to cooperate each others and want to form a cooperative society, but it will not be fruitful for them. So limited resources. Funds are limited to the capital contribution of the member who often have a limited means. The low rate of dividend offered also deters people from investing more capital, right? Even though you are very much aware of the capital contributed by the cooperative society and its member are limited, but the dividend rate they receive from the cooperative society on their distributed capital or on their invested capital are quite lower. So in that case, more and more capital is not attractive to the further members, because once they observe that rate of dividend is low and already people have contributed their capital to run the cooperative society and they are getting a less revenue, less profit in terms of dividends, so they would not be attracted towards the contribution in the cooperative society. So limited resources further will not help to the member of the cooperative society, and it will not attract or lure the other prospective investors who can become part of the member of the society, and in that case they are not being fruitful in earning the more profit, and they would not part of the cooperative society anymore. So limited resources will not able, or when limited resources are not able to attract the more and more people in the cooperative society and its working conditions. Inefficiency in the management. Cooperative societies cannot afford to pay higher salaries to the higher expert professional managers. Management relies on a member offering voluntary on daily services who may not be professionally equipped. Sometimes it happens that if your cooperative society need a efficient manager or need a very professional managers who can handle all the operation, all the working aspects of a particular cooperative society, but management is not capable of paying so much handsome salary or big perks or higher amount of professional fees. So they definitely complete their operation working through the people who are voluntarily providing services to the cooperative society. So management only relied on members offering their voluntary services, so they are not professional, but they are not professional, so they will definitely not able to efficiently manage the operation of the cooperative society. So this is the very basic and a fundamental limitation of the inefficiency in the management of the working of the cooperative society. Next, lack of secrecy. Open discussion in the members meeting and a disclosure obligation under the Society Act make it difficult to maintain the operational secrecy, because each and every member of the cooperative society is taking part in meeting, and they will definitely disclose the some of the important instruction among the member of the society. So there is a nothing hidden, and there is a lack of secrecy related with their operation efficiencies, or where they can make some secret about the operation, how they can make changes in the overall management. So it all discussed openly. So it will not allow the cooperative society and its member to remain in a secret, remain secret, and it is totally open. And the peoples who are knowing about every aspect of corporate society, they will share with each other. So anything important that is somehow related with the secret and the confidential will not be entertained in this particular cooperative society. So there is a lack of secrecy. Next is a government control. In return for a privilege, they must comply with the excessive rules, account audits, and document submission. Control exercised by the state departments can negatively affect the operational aspect. So this is how your more important things will definitely take a charge on account of government control. So, in return for a privilege, they must comply with the excessive rules. Sometimes the government when provide a very low interest rate on their loans, sometimes they charge less taxes. So, when in return for a privilege that they have provided in form of lower tax or lower interest rate, so they sometimes impose excessive rules. They allow the cooperative society to do a account audit. They sometimes allow the cooperative society to submit an important document. So they are trying to exercise a control through the State Department that can negatively affect the operational freedom. A State Department will definitely impose some excessive rules and regulations. They will only allow account audit and document submission, and then after they can continue their operations. So in that case, they are definitely sabotaging their operational freedom. They are not being part of it. They are not able to continue their operation freely. Their working is negatively impacted, negatively affected. So the government control sometimes play a very fundamental, crucial role to control the cooperative society. Next is your difference of in opinion. Internal dispute and a contrary viewpoint among the members can make decision making difficult. Personal interests may sometimes dominate over the welfare motive if certain members seek personal gains. So sometimes people have a or a member have a difference in their opinion. Everybody wants to control the management of the cooperative working on its way, and they try to highlight their interest in a very significant manner, and they try to dominate over the welfare motive if certain members and seek personal gains. So sometimes your interest is quite dominating over the motive of the welfares if certain members seek personal gains. If a person wants to apply their own personal want to apply their own personal opinion to seek their own personal benefit, to seek their own personal gain, so definitely they will side by the welfare motive of the other members. They side by the welfare motive of the cooperative society, and they will impose their interest, and they will dominate or they try to dominate the overall functioning and the operation aspects of their management. So in this way, different opinion of a different people affect the working of the cooperative society. So while having an importance of the cooperative society, certain limitation will definitely affect its overall operation and its managerial efficiency. Now we are focusing on the type of cooperative society. So there are certain cooperative society as written here. First is a consumer cooperative society, formed to protect the interest of the consumer by providing the good quality product at reasonable price. They buy goods in the bulk directly from the wholesaler, eliminating the middleman, distributed profit based on the capital individual purchases. Second, Cooperative society based on the producer. They set up to protect small producers against the big capitalists and enhance their bargaining power. They supply raw material, equipment, and input to member, but their output for sale by their output for sale, distributing profit based on the production contribution. So consumer will only get qualitative product through the cooperative society. Producer will only produce important goods through the raw material and equipments, and they will sell through the cooperative society that is formed as per the Producers Cooperative Society Act. Third one, marketing cooperative society established to help the small producer sell their output at a reasonable price and eliminating the middleman. And they pool members' product and perform marketing activities like transportation, warehousing, packaging to secure the best prices. So, marketing cooperative society in which all the small producers and their interested are protected by selling their product at a reasonable price, and this will remove the requirement of a middleman, and all the product and service that have been produced by the small producers are sold through this particular societies, that is called marketing cooperative societies. Marketing cooperative society will arrange the transportation, warehouse facilities, and packaging to secure the best price that might be available to the small producer for their product. So in this way, marketing cooperative society will be helping to the small producer or small vendors. Next is cooperative society. As the name suggests, it is related with the farmers. It is formed to protect the farmers' interests and achieve the larger scale farming benefit by providing the better quality seeds, fertilizers, machinery, and modern cultivation techniques, which also resolve fragmented land holding problems. So when you are working through this particular society, most of the farmers who want to get benefit by large scale farming or large scale cultivation, they have a good quality of seeds, fertilizers, machinery, and a modern cultivation technique. So they can sell the harvesting which has been produced through this particular societies and its member who are almost all the farmers. So they will definitely have a very easy to form cooperative society, easy to handle the different input and output at a different level of primes. Their inputs might be seeds, fertilizer, machinery, and their output will be a good crops. So they can sell through this particular farmers cooperative society, and all the fragmented large land holdings will be solved, and the problem of fragmented large land holding will be solved, because all the farmers who have a fragmented land will work on a particular land. They will definitely join together to make a large scale to have a large scale farming benefit by resolving the fragmented land holdings problems. They will put the land at one place if they have a segregated land in a very sequential way. So they will observe a large scale farming benefit through the cooperative societies. So this way your farmer will be more benefited by having the quality seeds, fertilizer, and machinery, and they will definitely have a more benefits by producing more goods, qualitative goods and services in this manner. Next is credit cooperative society, established to provide a steady short-term credit on the reasonable term, protecting members from the exploitation by lender charging the higher interest rates. They offer loan out of the pooled capital and the deposit at the lowest interest. This type of credit cooperative societies are very much prevalent in the market right now, and these type of credit cooperative societies are formed to provide a easy short-term credit on the reasonable terms to all the lenders, all the people who want to who want to have a that amount of loan in a form of a short-term credit, and they can buy their they can buy the different inputs of in terms of their seeds and fertilizer and sometimes machinery. So this will allow them to have a short-term credit on a reasonable prices. So these type of credit society will allow the credit to be easily available to the member of the society, and they can repay their interest and their principal amount in a very convenient way. So they offer loans out of the pooled capital and deposit at the lowest interest. So credit cooperative society in which the members who contributed capital, all the capitals are put together, and whatever amount is collected through their contribution, a certain amount of money is distributed, is given to the person who have a requirement of that money, and he or she has to pay the interest on that amount that they have taken for their personal use, sometime for their farming use. So at that moment they have to pay the lowest interest to the credit cooperative society back. So in this way they can freely or easily submit their principal amount and the interest, and they are avoided, they are not being exploited by the lenders who are charging the, yeah, sometimes who charge the highest rate interest on the amount given to them. So this is how your credit cooperative society will helpful for the people. Next, cooperative housing societies. Cooperative housing society is set up to help people with a limited income construct houses and procure residential flats in a plot at a reasonable cost, often providing flexible payment option in installment. It is set up to help the people with limited income construct houses or procure residential flats and plot at a reasonable cost. This type of cooperative housing societies, or sometimes you have heard about the cooperative housing schemes, they are set up to help the people who have a less income and they are not able to construct their houses easily. So these type of cooperative housing society will help them to organize their flat, help them to purchase a plot at a reasonable cost, and they will give them a very flexible EMI option, flexible payment option, in which they can pay in installment. So this type of cooperative housing society will have the members who have a less income, and if they want to have their own individual houses, so they would be helping these kind of people, and people can easily deposit their installment as per their available payment options. This is how your cooperative housing schemes will work for them. Next, we are working on our next important forms of organization, that is your joint stock company. Joint stock company is very much important in this field, in these forms of organization. So let me help you to understand. A company is an association of the person formed for carrying out the business activities, processing a legal status independent of its member, same as a cooperative society. It is described as an artificial person having a separate legal entity, perpetual succession, and a common seal governed by the Company Act 2030. So you are same as like your cooperative society, but here something is important from the company's point of view, because all the cooperative societies are registered under the State Cooperative Act, but here the company is registered under the Companies Act 2013. As the cooperative society has its separate legal existence, in the same way, company has a artificial person and a separate legal entity, and a perpetual succession means the company will continue for a long period of time under a common seal and is governed by your Company Act 2013. So, joint stock companies have a shareholder. Shareholders are the owner, while the board of directors and the chief managing body elected by them. Capital is divided into smaller transferable unit is called shares. Now we focus on the features of the joint stock companies. First is it is same like a cooperative society. It is an artificial person that is created by laws. It exists independent of its member. It can own property, incur the debt, borrow the money, and enter the contract, but cannot breathe, eat, and talk, and making it a artificial person. So this is how, yes, this is your artificial person who is working as a company. Second is a separate legal entity, same like a cooperative society. From incorporation, a company acquire a identity distinct from its owner. Its assets and liabilities are separate, and laws does not recognize business and owners to one. They are totally separate from each other. Formation. Formation process is a highly complicated, expensive, and time-consuming, involving the preparation of a numerous legal document and compulsory registration under the Company Act 2013. This joint stock company have a features like perpetual succession, that mean being a creation of a law, it can only be closed down by the law through a specific winding up procedures. A member may come and go, but the company continue to exist. This company can only have a winding procedures when it is closed down by the laws. They only they can only be closed by the laws and through the winding up procedures suggested by the company or its registration process. Next is your control. Management and control are vested in the board of directors, which appoints top management officials. Shareholders own the companies but do not have the right to involve themselves in a day-to-day operations. Definitely, it's a very important point. Board of director has to manage and control all the uh, operational aspects of the business, decision making activities, decision making procedures. Shareholders do not have a direct control in the management of the business activities and the operation, and sometimes they do not have the voting right except themselves in a day-to-day operation. So shareholder own the company but do not have the voting right to involve themselves in a day-to-day operation. Next is your liabilities. The liability of the member is limited to the extent of a capital contributed or any unpaid amount on shareholder share held. Creditors can only claim company's assets, leaving personal assets protected. So if any liabilities arises in the company, but the liability of the member is limited here to the extent of capital contributed by them or any unpaid amount on a shareholder shares held, because as a joint stock companies, shareholders become the owner of the company when they purchase some of the shares by paying a required amount of capital that is divided into a denomination of 100, 10, or any other amount of per unit of the shareholder, per unit of the shares. So they become the part of the company, they become the shareholder of the company, but they are totally limited towards their capital. If they want to pay any limit pay the any liability that is outside of the business in form of creditor, in form of BP, their personal assets are quite safe. They do not have to pay their personal asset, they just have to pay or pay out of their capital contributed to the joint stock companies. So their limited is fixed, their limited is very much confined to the capital contributed by them. Next is risk bearing. Risk or risk of loss is separated across a large number of shareholders, unlike the sole proprietorships, partnerships, where few individuals bear all the losses. So here, your risk of loss is spread across a large number of creditors, right? In a company, if there is a loss, it is distributed or it is be borne by all the member of the joint stock company or sometimes the shareholder of the companies by out of their limited amount of capital, some contributed by them. So their risk bearing is limited to their capital. and risk is separated. Risk is spread across a large number of shareholders. Unlike the proprietorship or partnership, they do not have to pay from their personal assets. But in a proprietorship or in a partnership, sometimes they have to pay out of their profit, out of their personal asset. So these are the main feature of the joint stock companies. Now we are moving on merit and demerits. In the same way, joint stock company also have a limited liabilities. It reduces the investor risk as a limited are liabilities are restricted to the unpaid shares amount and protecting the personal property. Transfer of interest. Share of the public limited company can freely sold in the market and converted into cash, avoiding the investment blockage. Perpetual existence. The entity functions stably and is completely unaffected by the death, retirement, and resignation, insolvency, or insanity of its member. Perpetual existence. It allows all the member, whether they are being part of the company or not. Sometimes they are died, sometimes they are retired, sometimes they have to resign, sometimes they become insolvent, sometimes they become insane. So in all the cases, continue company will continue its operation. So it's have a perpetual succession or perpetual existence in the eyes of laws. Next, scope for expansion. All the financial resources can be accumulated by pooling the funds from the public and securing loan from the financial institutions, facilitating the extensive growth. So, joint stock companies can open its branches at a different destination, at a different places, or at different location as and when required. But they should have a particular pool of funds from the public. Sometimes they have to secure a loan from the financial institution or from the bank. So it will this kind of fund and this kind of loan facilities will help them to have an extensive growth plan, extensive growth expansion in terms of their business and its related aspect. In that case, your joint stock company will have a certain merits that might be helpful to understand. Next is your professional management. All the activities of the joint stock companies are particularly managed by a professional. So when you have a high financial capacities, allow the companies to pay attractive salary to specialists and professionals. So definitely they will hire the specialists and the professionals from the market. It will help them to lead the departments and specialized activities, and they will and it also help them in taking the balance decision. It also help in taking the balanced decision making in terms of operation or in terms of their working. So they can lead to the different department. They can specialize in a goods and particular services. It will help them to charge or to take very balanced decisions about the department and about its working and about its product and services. So professional management is also available for this particular companies and its working. Next, we are focusing on the limitation of joint stock companies. Joint stock companies has a limitation. First of all, that is a complexity in formation. It requires a greater time, effort, and a high formation expenses and expensive compliances with the legal procedures compared to the other business forms. Lack of secrecy. The Companies Act require public companies to continuously disclose substantial operation and financial information to the registrar, making it accessible to the general public. So this is very fundamental limitation of almost all type of forms of businesses. Next is interpersonal working environment. Separation of the ownership and the management can lead to a lack of effort and a personal involvement by official. Large organization size makes it hard to maintain personal contact with the worker and client. Sometimes you have a work environment in which your ownership and management can be very helpful and sometimes can lead a lack of effort and a personal involvement by the official. Sometimes large organizations make it hard to maintain the personal contact with the workers or the client. So in that case, your working environment is hampering a mutual understanding between the workers and its client. Sometimes they are not able to have a very good approach to their workers, and they can get significant information about their production, about their overall managerial efficiency, about their overall management work. So when you are not following a particular work environment, or you are abusing your work environment, then definitely it will be definitely it will be hampering the conducive environment in which the workers and the client may work very closely, independently, and very coherently. So in that direction, they will need some kind of interest, and but this is the limitation in this case. So you should be very careful about handling this kind of situation or this kind of problems. Next is numerous regulation. Operations are subject to a many legal restriction, audit, voting guidelines, and the document filing with agency like SEBI and the registrar, which reduce overall operational freedom. So in this way, they have to focus the numerous regulations suggested by Company Act 2013, or sometime they have to go through the audits, or sometime they have to follow the voting guidelines, document filings with agency like SEBI. If you want to if you want to list your companies, or by allowing your share to be subscribed by the general public. So in that case, you have to have a numerous regulation, and you have to follow different you have to provide them a different information at a different period of time. So this is very crucial. Next is delay in a decision making. Managing through the democratically run abroad and the multiple management uh, tiers creates long-term communications and approval path, causing delays in the action. So this is very fundamental. It's a There definitely delay in the decision making because of the management and the board of directors who run the particular department or the particular board of committee. They will definitely have a long-term discussion with each others, and it will take a long time to approve something important or something path or the particular area where decision making should be so early and strong without any delay. So once they experience the delay in decision making, they are totally overwhelmed by this kind of working. So the companies has to be very prompt in taking the decision, in taking the important decisions about the operation and efficiency aspect of the management. Next is oligarchic management. In theory, it is a democratic, but practically, because shareholders are spread country-wide and few attend general meeting, the board of directors enjoy concentrated freedom and a power which can sometimes be used contrary to shareholder interest. Organic management will definitely hurt your working in this particular field, and in this theory it is very democratic, but practically, when the shareholders are not being able to attend the meeting on a time, then the board of directors enjoy the concentrated freedoms and the power without analyzing the shareholder who are not being able to attend the meeting. So sometimes they give instructions, sometimes they give their opinion, which are not very common and not fruitful for all those shareholder and their interest who have contributed their capital in the company. So director dominate their suggestion, dominate their opinion in order to control the freedom and the power, and they try to channelize the operation, they try to channelize the working efficiency of the management through their own perspective. So in this way, your management is not paying you a very fruitful advantage in terms of your freedom and power. That is a very important weapon in the hands of the shareholders. So you should be very careful as a shareholders. If you are being part of the company and you have contributed, you should particularly attend the meeting, and you can also analyze the informations or the director's views point, and how they are suggesting, how they are opinion they are providing their opinion about the working, about the management. So in that case, you are very much important as a shareholder in the annual general meeting. So every time you should attend annual general meeting which are being fruitful for the management point of view. Next, we are focusing on the conflict of interest. Managing a company's present problems because of the diverse stakeholders demand. Employees wants higher wages, consumers want lower prices, and shareholder want high dividend. So all these are the conflict of interest. Employee want more wages, consumer want lower price for the good, shareholder wants more dividend. So in order to manage all these type of interests in the better interest of the employees and the consumer and the shareholder respectively, so management should understand the problem, find out the solution of their respective problems in a very easiest manner. So in this way you would be able to manage your working. Next we are going to discuss types of companies. Joint stock companies have a following types, in which it includes a private company, public companies, most of the cases. What are the private companies, and how it is different from the public companies? So, private companies that have a restrict its member right to transfer its share. You cannot transfer the share if you are being part of a private company, or you have buy if you have bought the shares in a private company, you cannot easily transfer your share to someone else in the market, and have a minimum amount of two or maximum of 200 member, excluding the past or present employees. As a private company, you should have at least minimum two or maximum 200 member who are being part of the management, or who are being part of the employee and its group. Next, it is strictly prohibited from inviting the public to subscribe its security. They cannot issue their shares in the general public, and people cannot subscribe them. Public company must use the word private limited after its name. You have heard this particular situation or this particular point number of time, like XYZ private limited companies, or Reliance private limited companies. So in this case, a private limited company has to put the word private limited after its main name, or its a first name. Privilege over public companies. It can be formed by just two member versus seven. There is a no need for prospectus. Private company do not need any kind of prospectus or prospectus at all. They can start business immediately after incorporation without minimum subscription limits, and it require only two directors and do not need to keep an index of the members. So this private company has the privilege over the public companies. They need only just two members to start. There is a no need of prospectus for the private companies. Business can immediately open or continue after getting the certification of incorporation. There only minimum requirement of a two directors, which allow the private companies to run, and they do not need to keep an index of the member. So these are the private limited companies which have a fundamental features, fundamental characteristics about its working, and how you can register as a private limited company. So you must know these five important elements. Now we are focusing on the public limited companies, or public company, a company which is not a private and have a minimum seven member. In a private limited companies, you should have a minimum two people. Here you have a minimum seven members. In a private limited company, maximum strength of the member are 200. But in a public limited company, there is a no limit on the maximum side or maximum number of people or maximum number of member. Place not restriction on the transfer of security. These in these companies, if you have a purchase a particular shares or share quantity, then you can easily transfer them. You can easily give them to other person openly, and you can charge whatever amount you have invested once you have purchased it. And now that person become the owner in place of you once you shift or once you transfer your securities to him or her. So this is the fundamental for the public limited companies. Next, it is permitted to invite the public to subscribe to its shares or debenture. In a private limited companies, they cannot issue shares and the debenture for subscription, but public limited companies is free to invite the public to subscribe its shares and its debenture. They can easily invite the people who can buy their shares and debenture in open market. Note: a private company which is a subsidiary of the public limited is also treated as a public company. If a private companies who is working as a subsidiaries of the public limited, that is also considered as a public limited companies or public companies. So this is the basics of the public and private limited companies. Now you can easily understand which forms of business organization you can prefer. Here we have mentioned mentioned one of the table which will allow you to go for which kind of form of business organization that is suitable for your business. So if you have a capital, then you can go for a companies. If you have a less capital, then you can open your sole proprietorship. If you want to consider cost of formation, then you can go for sole proprietorship. If you do not consider cost is an important factor, then you can go for companies as well. If you focus on the ease of formation, how easily you can form a particular form of organization. So most advantageous form is your sole propriety. It does not require any kind of formation or registration. But if you want to open a company, then definitely it will have to you will have to face some of the important formation formalities in terms of capital, in terms of registration, in terms of members. So every time you have to in you have to follow the some of the major formalities, and definitely it requires some time to get a particular certification of execution or certification of registration. So you cannot easily form the your companies, but sole proprietaries is easy to understand and easy to implement. Next, you can transfer of ownership. Companies In a companies, if you want to follow a private public company, then you can easily transfer the shares from one person to another. And in partnership, you cannot transfer your ownership to someone else. If you have to follow the managerial skills, company in a is a most advantageous form of company in which you can use more managerial aspects, more managerial skills. You can lead the other, you can manage the others. But if you have to follow very less amount of managerial skills, then you can choose sole proprietorship. If you are not aware of any kind of skills, if you don't know how to manage your firm, if you don't know how to lead others, then you can go for sole proprietorship. Then regulation and secrecy. If you do not want to follow more regulation, and you want to secret your element and secret your business, then you can go for sole proprietorship. But if you want to follow more regulation and uh, less secrecy, then you can go for companies, right? So this is very important. On the behalf of flexibilities, you can differentiate. Most advantageous form is a sole proprietorship, and least advantageous form of companies. Sole proprietorship is more flexible than your companies. In terms of continuity and stabilities, company is the most advantageous forms than your sole proprietorship. Company will continue. Company is stable for a long period of time, but sole proprietorship will end or come to an end if you find that businesses are not getting more customer, your product is not being sold in the market, then you can shut it down. You can shut it down. So sole proprietorship is less advantageous. If you want to focus on your liability exposure, you can work on company or cooperative societies. If you want to have a less liability exposure or want to bear the less liabilities, then you can go for sole proprietorship or partnership. So liability exposure is higher in a company or cooperative society, but it's very less in a sole proprietorship and your partnership. So companies and cooperative societies will give you more exposure in terms of liabilities, and sometimes your companies and cooperative societies bear a very limited amount of liability or risk associated with it, because the because your liability or risk is purely confined to the capital you have contributed in the business. But it is more in terms of sole proprietorship and your partnership. So on a fundamental basis, liability exposure is less in companies and cooperative societies, but it is higher in your sole proprietorship and your partnership. So, if you want to go for less amount of liabilities, or you want to bear the less risk, then you can open the companies or cooperative society. But if you are comfortable with bearing the more liability and more risk, then you can go for sole proprietorship and your partnership. So this is how your forms of business organization, or the choice of the business organization that you can choose as per the factor associated here. So we have concluded our chapters, and thank you very much for listening end of this particular chapter. If you find this chapters good, and you can you can share it, and you can subscribe this particular channel so that you can get more and more information about further chapters. So till then, take care and have a nice day. See you in the next chapter.